Are you chasing higher returns in today's uncertain economy? Low interest rates got you down? Imagine earning a potential 46% yield in 2025. But is YMAX truly the answer? In this video, we bring in a financial expert to give you the unbiased truth about YMAX in 2025. Now that we've got your attention with that impressive 46% yield figure, it's crucial to understand exactly what YMAX is. YMAX is an exchange-traded note, or ETN. Think of it like a specialized investment product, different from typical stocks or ETFs. It's designed to track an index, focusing on companies employing covered call strategies, often within the technology sector. Now, what's a covered call strategy? It's where companies sell call options on stocks they own to generate income, contributing to that high yield. The key takeaway is that YMAX is built for income generation, not long-term capital appreciation. It comes with unique risks we'll explore. With this basic understanding of YMAX, let's move into the expert analysis of its potential in the market context of 2025.
As we move into 2025, interest rates are expected to remain stable with slight adjustments based on inflation. In this environment, the high yield of YMAX becomes especially attractive compared to traditional fixed-income investments. The rate differential could drive investor interest towards higher-yielding alternatives like YMAX. However, market volatility due to geopolitical uncertainties might increase in 2025. Covered call strategies like YMAXs can generate income even in flat markets, but extreme volatility impacts option premiums. Significant market downturns could lead to capital depreciation, offsetting the generated income.
To assess if YMAX is the right choice for you in 2025, we must compare it against other high-yield investment options. High-yield bond ETFs, focused on corporate debt, typically yield 5 to 8% and carry moderate risks. YMAX targets a significantly higher yield, but does so with greater exposure to equity market volatility. REIT ETFs invest in real estate and offer attractive yields, but are impacted by real estate performance and interest rates. Compared to YMAX, REIT performance is more tied to real estate markets, offering different risk exposure. Covered call ETFs use similar strategies to generate income. Key differentiators include index-tracked and expense ratios. YMAX aims for a targeted 46% yield, but requires scrutiny of its expense ratio and risk-adjusted returns compared to others. Let's summarize these comparisons in a table.
Chasing a 46% yield involves significant risk. Be aware of what you're getting into with YMAX. One primary risk is a broad market downturn. A significant correction could lead to a decline in YMAX's value. YMAX's covered call strategy limits your upside potential in rising markets, potentially leading to underperformance. Consider costs associated with YMAX, including higher expense ratios and brokerage costs that can erode returns. YMAX carries the credit risk of the issuing financial institution. This could impact its value in a crisis scenario. Investing in YMAX is not risk-free or a quick wealth-building scheme. Conduct thorough due diligence before investing.
Is YMAX a worthwhile investment in 2025? The answer truly depends on you and your financial situation. YMAX might be an interesting addition for certain investors actively seeking high income and comfortable with investment risk. It could work well for those who have a strong understanding of market volatility and a well-defined asset allocation strategy. However, YMAX may not be right for investors focused on capital preservation, new to investing, or needing predictable returns. Always conduct your own research and consult with a financial advisor for personalized guidance. Investing wisely starts with understanding your risk tolerance and financial goals.
What are your thoughts on YMAX? Are you considering investing in 2025? Let us know in the comments below. If you found this expert analysis helpful, like this video and subscribe for more unbiased investment insights. Check out these related videos for more on high-yield investing and market analysis. YMAX offers a high yield, but it has risks like market downturn risk and strategy limitations. Understand before investing. Know your risk tolerance. YMAX may suit income seekers and risk-tolerant investors, but not beginners or the risk-averse.